Alrighty, my name is Nick B, and let's get into this week's futures overview. So, starting with the Forex Factory, Monday we have core retail sales at 8:30. Tuesday, not much going on. I mean, I see Fed Chair Powell speaks at 1:15 p.m., but I'm pretty sure I'm not sure that's really going to be market moving. Wednesday's pretty quiet. I mean, remember Mester speaks Thursday, unemployment claims, and then Friday it's quiet. So it's kind of a calm week, but again, tax seasons is in is in season. We have earnings coming up, and well, we're not going to ignore the fundamental side, but we're going to ignore the fundamental side a little bit. And this is going to be a little bit of a heavy tech session. So let's get into it, starting with ES. And I'm going to clear this up. If I can recreate what I have up here, then that means this is pretty much the setup we'll be looking for. So what happened last week really was that drop was more or less fueled by that Israel Iran headlines, and again, over the weekend we had a little bit of a scare with Iran launching missiles. From what I've been reading, most of them have been intercepted. So we saw that little bit of a push into open just now. Okay, again, that does not set the tone for the week just yet. We need a few things to confirm direction before we can consider, executing on a trade. So first and foremost, let's start with the all-time highs. Let me pull this up to the 3-year weekly. And again, why am I pulling up to the 3-year weekly? Because we need to go over what the previous all-time highs were, because this is a pretty sizable drop, and again, we're still above on the 20-day EMA for the weekly, and this is still a bull structure, but we are possibly prone to seeing a pullback, and we don't want to be on the wrong side of it. I know the idea is still buy the dip, but we need to be a little more precise on where we're going to be buying the dip. So with that said, let me go ahead and start with plotting this area here as the ultimate support, 48.10. It's a bit of a drop. It's quite a ways away, but that was the last previous lower high we needed to break to continue making higher highs, and we haven't looked back since. Ultimately, 48.40 is going to be kind of that base support where we broke out of, and you'll see why when I break it down. But as always, I am going to plot 53.33 because in the event we see a breakout of 53.33 and price can hold above it, it's very possible we see more upside. However, we're leaning towards the possibility where into May we sell off a little bit. We're kind of due for that pullback. We've been trying to call for this pullback since the first quarter really, and let's see if we can have it unfold, into the next month or two. So let's go ahead and break this down to the daily, because now I want to identify, I know what my floor is, where my sand in the line support is, if we do continue dropping, but I also want to understand what could be potential targets to the downside, or where will I really know that trend is beginning to flip. All right, so down to the daily. Like I said, I was more or less going to plot the support of 48.40 because that was the last base we kind of consolidated around for a little bit before we just kind of had that spike up, making higher highs, higher low, higher high, higher low, so on and so on and so on, so on. So, right, going back to what's going to confirm, the breakdown and the continuation to the downside. All right, so let's start identifying what's going on now. Again, we plotted our all-time highs. We know for a fact above 53.33 will continue on higher. But now let me go ahead and identify this higher low right here that we have over at 51.67. More or less, if price can manage to stay below 51.67, we could see a little more spillage below down towards probably 50.60 would be my kind of target level of support on this floor. Mind you, again, we're just dissecting price action into floors. Each floor, kind of gives us an idea of the direction we may or may not take on. Excuse me. All right. Now, on the daily as well, we have our 50 EMA, which is at 51.37. In theory, if we do see and start seeing a breakdown of 51.37, and especially if the candle closes below 51.37, probabilities are most likely leaning in the direction that we could see that continuation lower to our second higher lows of 50.62. Now, this is important because this is where we say roughly I would imagine, the dip gets bought. And if it doesn't, well, we're going to look to more higher lows as targets to the downside. In order for us to confirm that the trend is flipping and we're going to get a continuation to the downside, we need to break below two previous higher lows and stay below them. Because if that occurs, let me show you what I mean by that. So this is our first higher low that we were on the brink of breaking down just now on the bigger time frame. Again, direction and trend will always be determined on the higher time frames, more or less. If I broke this down to the 1 hour and the smaller time frames, you'll see how nitty gritty it is and how you could get kind of carried away with price action. Again, we want a little more precision here. So the first higher low is over at 51.67. More or less, again, if we get a breakdown and we can stay below it, we may continue down to the next higher low of 50.62. But most times, more often than not, especially in bull structures, the second higher low tends to be a much stronger support, and we tend to bounce off of those more often than break them down. Again, we're just looking at scenarios. I cannot predict the future, tell you what will happen with a certainty, but I can kind of identify what has a higher probability of happening using price action with logic here. So if we get that breakdown of 50.62, all right, it's kind of, I don't want to say game over, but you're most likely going to get a little bit of a trend change, a trend flip, and we can then begin targeting our next higher lows of 49.60, more or less 49.60, this area right here. All right, so I'm going to go ahead and mark this area off as yellow because that's going to be our confirmation that if this breaks, we're going to spill over, and our target probably to the downside most likely is going to be 49.57. Again, 49.57. If we keep below 50.60, 50.62, and head below 49.57, if that breaks, again, all we're doing is just retracing the previous higher lows as supports. So below 49.57, 49.60, our support would be 48.66. And again, as long as we stay above 48.10, really on the big picture, I believe we should be bullish. Because once we break below 48.10, 4800, I mean, now you're really starting to spill over and you have no more higher highs to hold up as support or higher lows to hold up as support on the big picture. If this breaks out, I mean, ultimately, I would look at the previous highs. If those break down, I would assume that we would keep seeing more downside towards the supports of 41.22. But that is, wow, that is way, out of the ballpark for now. At most, maybe we see 48.10, maybe, but we're going to be playing it slow. I think they're not going to make this move easy. I think there may be a bull trap setting up somewhere in the future. If I had to kind of now, deduce that, what would confirm that, and how can we navigate through here? Because again, on the weekly, on the daily, we've identified the floors. We understand, depending on which higher lows we're above or below, the probability of the direction we might take on. I mean, so far, I hope that makes sense. Now, we are above 51.67, and we seem to be pushing here. My first assumption looking at this on the daily is maybe we may be coming up towards the 20-day EMA, which is roughly your 52.20 area. And if that can break, maybe you get a continuation higher. I'm going to be honest, I'm very skeptical in this area, and I do want to play it slow. Unless we can get a break ultimately of, I would say, 53.10, 53.20, and we close above 53.30, on the daily, and I can feel comfortable taking that shot towards 53.50, 53.80 if price continues to hold. Great. But I have a feeling when it comes up to here, we might get that initial break of 52.20 as the 20-day EMA on the daily, but I feel like they'll start to sell us down around 52.40, maybe get us to the lower highs of 52.60, get the bulls excited, and then bring us down. I'll explain why I think that once we go over NQ as well. So I want to go over equities first, and then we'll look at kind of the instruments, I guess, where I look at to help me kind of with my conviction. All right, so that's kind of what we have to consider here. Be careful of 52.20, 52.40. Ultimately, excuse me, above 53.10, I would feel safer. Maybe. But unless 53.33 breaks, again, we're just guessing. That is not, that is not a strategy. We're not going to do that. All right. So enough babble. We get the idea. Below 51.67, we'll spill. Above that, we may have a chance. Let's break this down to the 4 hour to get a little bit of an idea of how we could navigate through that. All right. So right here, right away, I'm going to be taking a look at 52.56. That's the lower high. Okay, so this may be the level that we have to be careful of. Why do I say that? Because again, I have a feeling that if we cannot get a daily close, I want to say even above 52.57, I think we get tricked and then the move gets sold back down. And again, where I would feel safe kind of shorting or taking a stab at shorting is on the first break of the higher lows of 51.66, 51.67. Now, the other thing is, well, wouldn't you say that a trend reversal or trend change, you would need to break the second higher low on the daily of 50.62? Yes, you can, but doesn't mean that we can't take a stab at us breaking, our new supports, our new session lows. If we can break that with low risk, right, have a little bit of resistance at 5200, let's say we get below 5167, place a stop slightly below, above 5200, and target our first higher low of 5120, you know, well, actually, that's not good. I would ultimately target 50.62, but on the intraday, this is how I would lay it out. 51.20 is my first target to the downside. Below 51.20, I'd be targeting 50.100. Below 5100, 50.85, 50.80, and then we come up on the support of 50.62, where I want to say that's where we're going to bounce. I want to say that the bull structure and that kind of this bull market holds up, and 50.60 is going to be, that last support, that last stand. Again, if we do break, great. I'm wrong, I'll be wrong, and again, we can short the move. We're not exactly married to direction. We can continue shorting. But if we do bounce, this would be somewhat of a fair area, I would say, to bite on longs. Maybe we pull back up. Ultimately, again, though, if we are in these areas, something to consider in the future, if and when we are in the lower areas, for us to kind of feel safer going long after having this dip. Same concept as us, breaking down. We broke below two previous higher lows on the intraday, which is 52.33 and 51.85, 5200 area. These were our past higher lows. And again, because we broke two of them on the intraday, we kind of got that continuation lower, but they made us work for it. The market, the price action was not simple. It wasn't easy. Um, so again, likewise here, we kind of have that confirmation to the downside if and only if we can get a break of 51.67. Again, target 50.60 to the downside. So let me go ahead and place an alert at 51.60. I'll do 65. All right. For upside, I would feel a lot safer. 52.84. Well, no, gotta be above 5300. I don't know. Seems too familiar. Okay. Okay. Everything here in between for now, because of the tensions that are going on, I don't want to touch this. Maybe if it's worthwhile and I see that it's consistent enough where we can go long, take that stab for a quick few points in the morning, be done for the day within the first half hour, if that's possible, great. But again, until Monday open comes, we don't really have a direct idea of what the tone for the week will be. Yes, we're getting some bids here. Yes, it's kind of getting bought up. Yes, we're holding supports. But again, doesn't mean we can't break this down, into this week either. Again, our conviction is pointing that we do try to come up a little bit, and then roughly around these highs midway, we kind of spill back over and we begin the breakdown. But until that unfolds, we just have to be open to the idea of these different scenarios. So that's with ES. I'm going to move on to NQ. Real quick, let me see something also. Pull this up on the daily. Technically, we broke a trend line. Now, again, I don't always draw on trend lines, but it seems to me we technically broke a trend line. Let me extend it. And I plot my trend lines on the wicks of the candles. Wow, do you guys see what I see? We literally just went over this. Okay, so now sorry, I'm thinking out loud, but the pieces are starting to connect. And I'll show you what I mean. This trend line right here, when did it begin? Back in December 7th of 2023. All right, and we held up on it, this whole time, and just as of last week with the headlines, we spilled on over. And if we do come up for the retest, how ironic is it that it's right at the 20-day EMA of 52.20 on the daily? Exactly what I'm kind of trying to brace for if this is a bull trap. Because we might come up a little bit into this area, but again, unless we are able to get at the minimum a daily candle close, I would say to feel safe 52.40. I wouldn't be too quick to try to long this move back up top. Maybe it gets sold off here earlier. We'll see. We'll see. All right, so just keep interesting. All right, let's look at NQ really quick. I know this is a little bit heavy. I'll try to kind of go a little bit quicker with this one. All right. So as always, let's plot off our all-time high, 18,709, and then our previous all-time high. Okay, so we have an idea of what the sand in the line support would be before kind of everything goes sour. I would say if NQ ends up below 16,762, well, that's not going to be a fun time. All right, so we have more or less the floor identified in terms of trend. Above 18,709, we used the round number theory, 18.8, 18.9, 19,000 would be our target to the upside. Below, 16,762, we understand that the trend could continue lower. Of course, in between, we could capitalize, but let's start breaking this down a little bit more deeper. Let's look on the daily to identify our higher lows as supports and what needs to break down to get a continuation lower, or what will need to hold up as support so that price can attempt to get to the highs again. All right. Weekly, let's pay attention real quick. The 20-day EMA is at 17,578, 17,600 area. Okay. Okay. Let's look at the daily now. All right. Similar with ES, where we identify that base of 48.40 or 48.10, I believe it was. This is in a similar area here that I believe I can call a base because we kind of consolidated below this area. We weren't sure until we got that second nice breakout candle, and we never looked back. So 17,170. That is, I would say, my sand in the line, my line in the sand support. Oof, been a long day. All right. Okay. Now let's look at what our previous higher lows are. We have one over at basically 18,000. If I trace along through 18,000, you could see it acts as a resistance a few times. It was a previous all-time high, could not hold that area, broke down, then acted as a psychological support for price action for about a month. Okay, so we're definitely going to go ahead and plot that out. 1 second, 18,000. All right. Okay. Now, notice on the daily, this is our first higher low. If we get a breakdown of 18,000 and price can stay below it on the daily, not only is it below our 20-day EMA, it's below our 50-day EMA as well. More probabilities probably to the downside if, again, we can stay below 18,000. And the next target below 18,000 I would look at would be roughly 17,830, which is the previous higher lows in this area right here. Now, I'm not going to plot them right away because we'll get there when we get there. I don't expect that to be the first move to the downside, but at the same time, at 17,830, if that fails to hold us as a support, we definitely have room to head on lower, definitely more downside, and I would probably begin paying attention to the higher lows of 17. Well, let's use the candles for support because these wicks are just too aggressive for a one-day move. So let's use the candle of 17,570. Interesting. Hold on. So let's plot this right here. Let me pull this up on the weekly really quick. And all right, so you're telling me on the second breakdown of the second higher low, which is 17,830, our next target would be indefinitely 17,600. And coincidentally, the 20-day exponential moving average on the weekly is that 17,600 level. Perfect. That makes sense. So that's going to make dollars. All right. So that's one setup here that we can look at. And let me break this down to the daily. I'm going to definitely set an alert at 17,830. You know what? For now, I'm going to leave it alone. I'm just going to call out that a breakdown of 17,830. You can place your stop most likely at 17,900 and target 17,600 to the downside as the first support. That makes sense to me. Below 17.6, if price stays and holds below it on the daily, most likely we're going to begin spilling over towards, well, let's look at the wick, 17,370. So 17,400 would be the next support. Below 17,4, we would look at 17.2 to 17,170, which was the previous all-time high. Again, this would be kind of my line in the sand support. If that breaks, we'll probably continue heading on lower to the previous all-time highs, which are 16,762. But again, it's a little bit of a stretch. Even looking at 17,170, it's just a little bit of a stretch for now, just because we don't have the confirmation factors in front of us. So let's see ultimately what we get. And again, to the upside in terms of where maybe we might get bull trapped, let's take a look at it on the smaller time frames and what we would need to kind of break out of on the intraday to get that confirmation that we could go higher. Right away, right, we need to get above 18,518 and the second lower highs of 18,570. So ultimately, if we can't get and close above 18,600, most likely there is a strong possibility the move could come down lower. If into this week we can get a break and hold above 18.6, we may see a little bit of a continuation towards 18.7. Again, I would probably feel more comfortable as long as the daily candle can close above 18,709. I would go long and target 18.8, 18.9 as long as the supports hold. But since we're talking about a little bit of more realistic scenario, if we can't get above 18.6 ultimately, I would look to short, maybe 18.5, look to short. Definitely the first level kind of heads up that would give me a green light to look at shorting rips is a break below 18,050. If price breaks and stays below 18,050 on the intraday, my assumption is automatically going to lead towards us possibly seeing 18,000. And again, 18,000 gives us an intraday opportunity to short for a quick, maybe 100 points. Ultimately, the target would be 17,830. And you could see right here on the 4 hour, 17,830 acted as a support once back in, when was this? March, back in beginning or second week of March, twice, where we bounced up a few hundred points, came up towards 18,379, and then came back down 300 points, more, 500 points, only to bounce out of there. So again, if 17,830, which is our second higher lows on the daily, if that breaks, that confirms that we can definitely see more downside, and the assumption and probabilities lead towards 17.6, 17.4, and then again, bottom line support 17.170. That's downside. And upside. So bull trap again. If we can't get above 18.6 into this week, I wouldn't be too quick to look to long. With that said, let me pull up last but not least the dollar. I saw that we were getting a bit of a push on there. Yes, there we are. Okay. Okay. All right. So we just broke out of 105. If we can get back to 105, maybe slightly below it, maybe get a retest of 104, a little bit down to these areas, maybe that can help equities get a bit of a push higher. Now, if the dollar continues on going and we get a break of ultimately 107.25, well, we might just spill over. So that's what I'm kind of paying attention to. Oh, right. Not the dollar, really. What I wanted to talk about was the VIX. Really quick, also. Last week, we only spiked up to 1920. Keep in mind the level that we want to not get nervous for, but kind of just keep in mind that this is where maybe there's a little bit of fear selling, maybe there's a little bit more, premiums for insurance is above the level 20. So we weren't able to even spike above 20 and not even close above 18. And I think that's major. If the VIX can ultimately remain below 18, I think the environment for, the market would be a little bit calmer, a little bit smoother. Once we get to peak above 18, worries and tensions might start going up. Above 20, it's like, oh my God, throw the sink. We might see some fear selling. So that's what I'm watching out for the week as well. With that said, that is all she wrote. I hope you have a solid trading week ahead, and we will catch you into the week. Cheers.